today's presentation is going to be about the private placement. The private placement started in the year 2016. That has been the accumulation of almost 5 years of experience that we have with our investors. So basically we're going to go over the main details and some of the specifics of how the private placement works, how has been the track record, and basically give you an overview of the program. Like you know, in private equity solutions we have almost like 4 different programs, and we're going to go over in each one in detail. We're starting with the private placement. Let's start with this one. The mission statement that basically that when we created a company was to get a company that will be different. It will be solution driven, it will be tailor-made for the customer, it will be client driven and performance driven. But specifically we have detected that real estate is a great asset. It has so much flexibility, it has so much different alternatives and ways to apply different investment strategies, and usually is a market that offers income growth, inflation protection, and somewhat it has a negative correlation to the typical and traditional investments like stocks, bonds and cash. So the private equity solutions use the mission statement to create a program that will accommodate all the major needs and the best performance that we can offer, that it can impact the financial picture of each individual investor. As you know, yields in the last couple of years have been dismal, basically because since year 2008 we have a crisis and the interest rate environment became they offer very low yields. The Federal Reserve in an attempt to rescue the economy, lower interest rates, they have quantitative easing and other things that basically made the investments, the typical investments in the fixed income area like treasury notes, corporate bonds, money markets, utility stocks, they became very low yields. They became a very low yield alternative. As you can see, most of these yields they have been going between 145, 182, 3.5%, 0.7%, 3 to 2.5%. So it's very low yield. And inflation, you know that the cost of living, when you go to Whole Foods market or the supermarket, they're not going in that way either. They go probably higher than that. So usually low yields has been a very big problem for the saving community. So as we go along in the presentation and we have this panorama of the typical yields, we have our next slide basically presents the model that we created for our investors, and that's using the banks, the distressed individuals and government basically as a source to find very good deals in real estate that we can really offer through cash offers, obtain a good discount in the investment property or residential property, buy it at a deep discount and resell it at a probably not necessarily to the retail value of the market, but with a good spread and a good margin. We have increased that return by using velocity, by using leverage, positive leverage. Positive leverage means that you use money from the banks at a low rate and you can reinvest it at a higher rate. That's usually positive leverage. So when you combine buy at a discount level through government, banks, or distressed individuals, and you can buy a piece of properties and real estate at a very low level, and you can get a higher return through rentals or resale of that property, and you use positive leverage and you use velocity. Velocity means that instead of holding the property for 1 year, 2 years, 3 years, 4 years, or like most of the people they do traditionally 5-year horizon, you use it for 3 months, 5 months. Usually when you increase the velocity and you get good margins and you use positive leverage, that's a triple whammy combination for higher returns, and that's what the private placement offers to most of the for most of the investors or participants. The main benefits of this private placement is that you got a stability of principal because you're using an asset that is very stable and very well purchased. High income, because usually cap rates in the rental market has been between 5, 7, and some of them between 8 and 10%. Cap rates is a very sophisticated word to say net operating income divided by market value of the property. So it's a rate of return that you're getting. Like in your fixed income investment, like a bond, that you get a coupon rate or a fixed rate. Usually high income in real estate means that the cash flow that the property produces is very high in percentage in comparison to what you pay for it in the market value. Potential for growth, you know that usually properties, land is a very scarce resource, and as we multiply as human beings, land becomes more scarce, and usually you have good potential for growth. Remember, location, 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 and if you have a good PES offers a very good expertise in selecting very good areas with high demand and low supply. The private placement offers liquidity. It offers 4 windows for liquidity. Every quarter we offer the opportunity for investors to liquidate their dividends or part of the principal. We have a very good property track record, which we can submit and offer to all the investors so they can take a look at all our buys and sells in a spreadsheet that we have, and each property is recorded. Basically, we have a very, very solid track record of payment of dividends and distributions be paid on time, no more than 90 days. For some of our main investors in Puerto Rico, remember our company came from Puerto Rico, usually we offer some diversification in the United States, and that way that can offer somewhat of a outside diversification of the geographical area. Basically, as I mentioned before, our investment is very low correlated in rice and beans or in arroz habichuela, what they say in my island. Basically what it means is that this asset does not necessarily behave in the same manner as your stocks, bonds, or cash. And basically, very important, we're putting the interest of the investor first. And the recession counter-cyclical strategy is very important. Our best performance and our best track record acquisitions, purchases and sales have been in the distressed market. So usually when we have recessions. That's why it says recession counter-cyclical strategy. In the next slide, we will present to you basically our overall track record. This track record is updated and we send it on a quarterly basis so you take a look at it, how it has changed. And it has changed a little bit, but not much. The average is that of every 10 purchases that we have of real estate, we made over 30% triple net in 4 of them. So that's what the 41% represents and the 30% represents. 30% means the triple net return after taxes, interest, depreciation or costs, commissions, legal costs, closing costs. So it's triple net. It's everything is netted. 30% of every 10, 4 they give us a very nice return. 21%, 30% has offered between 21 and 30%. Around 26% of the portfolio, so it means of every 10, 3, almost 3 between 11 and 20. And we have between another 11% of the portfolio that has offered between 1 and 10%. Only 5% has been flat or negative. So 95% of every 10, 9 they have produced some type of positive return. Of those 9, almost half have produced returns between 30 and 21%. The rest have been between 11 and 20, and only 11%, 1, has been between 1 and 10. Overall, in summary, we're doing pretty good. I mean, the average return has been fairly consistent with very low drawdowns. Yeah. Part 2 presentation, private placement. In this slide, we basically we present the operational flow system. There are 4 four different sources of income. We got interest and dividends, we got rent, we got buy and sells, which usually in the argot of real estate investing is flipping. Flipping means that you buy and sell the properties in short-term basis. And then you got other transactional and consulting incomes that we get in the investment model. Usually these four sources, which it has the whole cash flow of the model, usually that's how we pay the operating expenses, the overhead, the legal costs, our personnel, our marketing, our loan consultants, financial engineers, as we call it, or analysts, and our internal operations. That's how we cover the overhead. If you go over, so we can present the other sources of the chart, you will see that you got the income, you got the different sources. You gotta go up. No? You gotta go down. Keep it up. There we go. You look at that most of the cost basis, we recover the cost basis, and the gains or additional income of the total return of the portfolio, it's reinvested in the same portfolio to increase the velocity and the margin of the portfolio. So with the excess return that we get from our acquisitions, that's what's so important, to have good selection and good criteria, and that's where our track record is. With the excess of those gains, after we pay the dividends to the investors that every quarter probably they will require, and we pay our personal and administrative consulting group, we can provide then the reinvestment of getting the velocity and the more better investment for the fund itself. It's called fitting in itself. And what it means too is that it allows to lower the risk, because with velocity is your best besides diversification. Velocity and diversification are the main investment techniques that we use to lower the risk for the overall portfolio. So you got new capital through the private investment, we get new investors since they can become very enthusiastic about our approach. The velocity is the balanced approach between rentals and flipping that we keep always diversified. We use positive leverage, not much, just a little bit, so we cannot lose any opportunity cost or any opportunities available as the market goes. And the margin expansion on new opportunities of increasing cash flow or capital appreciation is very important, because as you keep increasing the flow and the investments, the opportunities in distressed markets usually come a lot. There is a lot of opportunities, and we need the cash flow to fund those investments and not depend on leverage. So it's a way to increase returns and lower the risk. The asset distribution, coverage, and protection is very important. Let me tell you, this chart has improved in the last couple of years. This presentation has been, as we become in the learning curve of any enterprise, we become more mature, we become more sophisticated, we hire better resources, and this number that we have here is an average. But you will see, if I show you in the last 24 months of the different levels of return, we have been improving this number. But the average, weighted average rate of return is around 20.2% of the total portfolio. That has increased between 21 and 23%. Our goal this year is to increase it 2 more points to bring it to probably closer to the 25 level. Our expenses, they have increased a little bit too. The past was between 3, we're between 3.5 and 4.5%. The distribution, we have kept a distribution between 8% and 10%. So our net spread of operations has increased between 8.4 to 10%. But the average, we usually we don't like to disappoint people. We like to under promise, over deliver. And this number that we have here is exactly that. We have over-delivered, but the average that we did in our feasibility and analysis of the portfolio is between 7.2% net spread after cover all overhead and pay all dividends. So basically that's the way that the average return has been. As you can see, 60% of the portfolio have gave us around 30% triple net, 10% of the portfolio has given us around 7%, and 30% of the portfolio has given us around 5%. The next slide that we're going to go over is basically the investment process of the private placement. It's a very formal process. We are becoming better and better and better. This month we're very excited to announce that we're going to have different statements, that we're going to have a different format. We hire a CPA, internal CPA, to help us out in designing a better format for all our people. And as you go along, we're getting with better strategic alliances with professionals like law firms, real estate firms. That is in our website. You can visit our website in Private Equity Solutions. But basically this is the flow of the money. This is the chart of the flow of the money. Information is requested through a formal process. The treasury investment management and identification of acquisition targets immediately start when you put the money with us. Immediately our firm in Puerto Rico, Ferraioli LLC, which is our law firm, issues a closing binder that is distributed to you on PDF file with all the documents, with all the requisites that the Security Exchange Commission and the private placement ruling 506 requires for all the individual investors. The risk management and real estate, that's usually our formula that we have internally. So we evaluate the portfolio construction as we go along. If you go in the next slide, we do the due diligence process. We have people in the field and we do the feasibility studies. We analyze each feasibility studies depending on the portfolio. We process the compliance, the documentation revision internally in the office with our law firm and our accountants. And then we set up an investment criteria and the possibilities of investment. Immediately we have so you know it, every quarter we report what is your account statement, where's your investment, how much has earned, what is the state, when the initial investments, what has been the return. So everything is compiled on a quarterly basis for you. In the next slide, basically we have, so you know, on a quarterly basis we report what is called Carta de Participantes, which is a letter. It's basically like a shareholder letter that we present the status of general market conditions and reconciliation of market value. So you receive two communications every quarter. You receive the status of the general market conditions, what we have done in the portfolio, and at the same time, how are you standing and what are your numbers based on your investment. And we do something very unique. Here we're very proud to announce that we sit with each customer. Either if it's long distance, we do Skypes, we do conference calls. We meet with each one, if we can, every year, once a year, at least once, to each of our participants. So each of our participants have been with us more than 10 years. That's why they have that personal touch, and we have that personal touch with you. It's important that in the private equity solutions we have different ways. We got property building, which help us to develop and maintenance and do property management and develop projects in the real estate. So we have our own internal, we don't have to depend to subcontract somebody else. We got a hybrid model that basically allows to have a joint venture agreement with some of our participants in some specific projects and properties. We have mortgage notes. We can design a portfolio of mortgage notes tailor-made for you, for people that are more interested to have control of the asset and have investment income on a monthly basis. And at the same time, we have a new opportunity that we're expanding in the next 6 to 12 months called Second Chance Solution Corporation, which will be creative, innovative in Puerto Rico and for the United States eventually for different areas of mortgage acceleration, restructuring of debt, and other helps.